Let's talk top 50. Top 50 what? Top 50 US stock pair stars. When you open up Ultimate Alpha 3.0, first thing you're going to see is this empty watch list, and you're going to wonder what to do. So we've done all the heavy lifting for you and created what we call the top 50 US stock pair stars. And if you hit this button here, showing autoload pairs, all you need to do is hit the autoload US equities pairs button, select your data feed. Here we have two that are available, Yahoo and DTN IQ feed. IB isn't connected right now. Let's choose IQ feed and say OK. What happens? You will now get 50 US stock pairs automatically loaded into your watch list. You can see this happening now. And what kind of pairs are being autoloaded? Well, let's go into that in a bit more detail. So if you go to the PairTrade Finder autoload.html page, you'll see a summary of the June 2024 layered top 50 US stock pair stars. And this is all of the securities universe and backtest parameters we use and the results filters applied. So these are all 3-year back tests. We're using 2 entry layers. They're $5,000 a leg entry. There's a maximum days in trade of 40 days. All the companies are over $2 billion market cap, over $2 million a day of average daily traded volume. So they're easy to borrow. You can trade in and out of with lots of liquidity. And we have made sure they're all fundamentally correlated. When we do the back tests, which you may have seen in our earlier video, you have to go and copy all these tickers from each one of these industry subsectors, backtest them all, choose which pairs are the best, look for fundamental correlation, and then one by one build up your pair list. Well, we've done all that heavy lifting for you, as I said. So we'll take pairs that are co-integrated, correlation targeting at least 50%. We want to make sure that every trade delivers on average about 250 because we're doing layered trades now. We want to make sure there's a win rate of at least 70%. And we've got some wildcard pairs in there. So let's go back here. Now you've seen, while I was discussing the parameters, this is now populated. All 50 of these top 50 stock pair stars. Here's the count, 50. So instead of having an empty watch list, you now have a watch list filled with 50 pairs that have been pre-screened with all of those criteria to give you high probability pairs and trading signals thereon. So why don't we just quickly take a look at a couple of these so you see what we're talking about. So HGV, let's check out the back test on this pair, HGV MGM. This red box comes up because it's sitting on watch list. HGV MGM, 3 years, 7 trades, over 70% correlated, average co-integration of 0.97, highly co-integrated. Money left in this pair delivered over 8%. Max drawdown was never more than 6.4, so positive reward risk. Average 100% were winners. Average trade was $362. You can see the equity curve here. Each one of these trades looks very, very good. Bit of a drawdown here, but otherwise looking great. You can see the moving average of the core ratio of the pair is fairly stable over time. Lots of zero crossings, exactly what we like to see in a good back test. What are these companies? If you just right click over here, you can pull up a fundamental snapshot on them. Let's get this snapshot. And we're just going to drill down on 2 of these pairs so you can see what's included in the top 50 US stock pair stars. So it's Hilton Grand Vacations versus MGM Resorts. Let's get a company description. Hilton Grand Vacations is a global timeshare company, engages in developing, marketing, selling, managing, operating timeshare resorts. MGM Resorts International is the ownership and operations of casino resorts. So they're both resort companies. How do they look fundamentally? Both in the same industry subsector, price almost the same, beta 1.83 versus 2.2, pretty close, enterprise value 11 versus 41, within tolerable ranges, EV to sales identical, EV to EBITDA 14 versus 17, very close, price earnings 19 versus 16, very close. You can see here price to sales 1 versus 0.8, all very, very close. So the market valuing them in a very similar way. So that's one example of a pair that you no longer have to go and look for because we've done it for you, and we've done it for you 50 times with 50 great pairs. If we look at this one, IFF, MTX, what does our back test look like? This is one in the specialty chemicals space. We've got a 3-year back test. We got six trades, over 50% correlated, very, very co-integrated, 0.99. Compound annual growth rate of your money, 8%. Max drawdown, 6.6. Positive reward risk. 83% winners, 434 average net profit of the trade. And that's what the backtest looks on that one. What companies are these? Again, we just pull up the fundamental snapshot, grab the snapshot, and we see it's International Flavors versus Mineral Technologies. They're both in the specialty chemicals industry subsector. Beta 1.27 versus 1.32, almost identical. Enterprise value 35 versus 3.4. That's on the edge of tolerability. Price to free cash flow 25 to 16, pretty close. Price to book 1.7 to 1.6. You see there's quite a similarity in valuation. And if we look at the description, IFF engages in the manufacture and supply of flavors and fragrances used in food, beverage, personal care, and household product industries. Mineral Technologies makes a range of mineral-based and synthetic mineral products, and it operates through the consumer, specialties, and engineered solutions segments. So they're doing the same kind of additives across very similar industries. So again, very similar companies. What we also want to highlight is, so not only have we found you 50 that meet all of our criteria, they also meet all of our volatility criteria, under 3% in most cases, certainly under 4%. And they cross a number of different industry subsectors, so you don't have too much concentration. You have a lot of diversification, and we've tried to make sure that we don't repeat any tickers. There may be one or two repeats in here, but otherwise, for the 50 pairs, you've got 100 different tickers, again, ensuring you have great diversification. So if we were to just go to trading signals, go back a little while, you can see all of the signals that these pairs would have generated and that form the backtest that we're looking at. So this is from 1st of August 2023. If we go back to June, I think these launched on the 19th. So if we go back to the 19th, here you would have the last year of trade signals, and you can Excel export these. So I've done that. Here's the Excel export. And here you have, for the last year, every entry from these 50 pairs by layers as well. You can see here, SZS, first layer, second layer, all of the layers being done properly. And then all of the exits for the last year. We won't dive into all of them specifically. What we will do is dive into this summary I've prepared. So these are the layered top 50 US stock pair stars, June 24 vintage. This is the last 12-month back test. To be clear, the last 2 months of this, so May and June, actually since 16th of April until 19th of June, these are actually live signals out of sample. All of these ones here, these trade closes were live signals. Here are the results. But this is the overall 12-month back test. You've got 156 closed trades, 61,712 of net profit. Average net profit of trades was 396, 145 winners, 11 losers, 93% win rate. Biggest win was 2,300 in one trade. Biggest loss, 777. The average reward risk 3 times with a 93% win rate. Pretty amazing. Again, remember, this is backtest, although 2 months of it are out of sample. The P&L pre-open on the 19th of June when this analysis was done was over 800 in loss, which means your net profit for the last 12 months from this group of pairs was 60,870. Now, what would you have needed in terms of account size to trade those on $5,000 a leg for the 2 different layers? Well, there were 13 trades on average outstanding. Let's put 25% headroom on that, say you can carry a capacity of 17 trades. The average exposure per trade based on layer frequency, so they didn't all go into 2 layers. In fact, if we look at this, 59 trades were 2-layer trades, 97 trades were 1 layer only, so they were only 5,000 a leg. These 59 were 10,000 a leg. The average leg size per trade, therefore, is only about 7,000, which means you needed almost 14,000 average exposure per trade, which means your maximum nominal account exposure, if you take this number times the 17 open pair trade capacity, means you would need to have a nominal capacity to trade this of about $234,000. If you're using 5-to-1 CFD leverage, that would mean $46,800 in your account. Let's add some headroom to that margin for extra trades, for any kind of offside P&L. It takes you up to about $56,000 of account equity to trade these pairs on 5,000 leg with 2 layers, 5,000 per layer The net profit from the above, $60,870. Take out the interest on the margin, over $6,000 at 6.83% IBKR Pro margin rate. And you're left with $54,384. That equals, based on this account balance, 96.7% return in those 12 months. That's an imputed return of 5.8% per month. What did the S&P do over the same period? Only 2% a month, even though it had an incredible year, 26.8% on the S&P. That includes dividends. So that was 2% per month. And the Laird Top 50 June Vintage Alpha Gen per month, based on this back test, is therefore 3.8% over and above what the S&P delivered over those 12 months. That gives you a very good idea of what these 50 pairs that we automatically load into your watch list. When you hit the auto load pairs, PairTrade Finder button, that's what you're going to get, and they will be calling immediate trade signals that you can study and decide whether or not to trade. Happy trading, everyone.